You good over there? I said, Stephanie told me I should get in touch with my feminine side, so I crashed the car. You don't like that one? Hey, we good to go. Let's do this thing. Welcome to the Closing Beat, everybody. Happy Monday. How you doing? I was just hanging out. I just realized it's time to go, man. This is what we're supposed to do. This is our show about the stock market. We talk about it every day. All the good, the bad, and the ugly that's going on out there. We're financial advisors, so we like to talk about the market. Unlike others out there that like to sell you stuff, we don't sell anything, and we just like to do our thing, help you out, and as we say, help you keep your dough straight. So if you're interested in joining Jazz Wealth, you just go on over and join us on the website. It's all good. Anyways, hey, what a nice little reversal day today, huh? Very interesting. There's not really a lot to say because a certain someone dominated the headlines this afternoon. So a lot of the other stuff just kind of got washed away. But let's take a look anyways. We're going over here to the charts. The S&P started off the day with a minor gap up and then started selling off very first thing in the morning. If you take a look, a lot of this started right after lunchtime and actually in lunchtime, about 12 o'clock there. The rally that started here, in fact, did put in the low for the day, and that was it for the rest of the day. And then you got the Elon Musk rally to finish out the end of the day as people were getting more excited. And so that's the S&P. We broke through the halfway point. We were working on making our way back down to these prior lows, but it's a pretty convincing reversal today for the moment. And so everybody temporarily is excited that the market at least has some life in it, I guess. If you look at the NASDAQ, that's going to perform a little bit better, and that's because most of your tech stocks actually took a shot at moving higher today. Now, it's a busy week, I'll tell you. For the tech stocks, you've got Tuesday and Thursday of this week will be the most amount of market cap that will be reported throughout the entire earnings season. So, of course, you have Apple coming up and Microsoft and a bunch of others. And so that'll be the focus. Tomorrow's earnings throughout the day and after hours, as well as Thursday. That'll be your highlight days. Nonetheless, the NASDAQ, also very extended here in the short term, gave you an attempt at a bounce, which the same thing happened. A little wild to start the day. We talked about it in our office trades, and then finally put in a low and gave you a rally there. We actually went long on the Qs, which you could use this guy here just as an office trades, and that was our second best performer for the day, even though it didn't get the best price, but hardly ever do. So that's the NASDAQ. You got the Dow also trying to recover a little bit. It's not very extended here, though, so the Dow's basically just participating with everybody else. And the Russell would be the weakest of the group. It almost came back down to prior lows. We'll call it good enough. And that's the spot that everybody says, line in the sand, not willing to let it fall underneath that. So it was nice. Small cap stocks got a nice little bounce there as well. If we're looking around, you got gold pulling back, pretty sharp drop on gold there, and any commodities in general. Crude oil is another example of that. So anything related to that, oil service stocks mostly had all of a large gap down here today. Gold mining stocks with a big move lower, actually put on a little bit of long on the GDX we did in the office trades there for you. You got energy, XLE is one of them, and you could see the ticker symbol. Yeah. So you can see what I'm looking at here. Oil proxies all moved a little bit lower. Silver, anything commodity driven today was one of the worst performers and has been the worst performers over the last couple of days. On the upside, you got home builders with old Dr. Horton reporting earnings there. Semiconductors also got you a decent rally. Pretty much every semiconductor. I don't know about Broadcom. Did that finish higher? Okay, Broadcom did just finish the day out with a 0.16% gain, but that was the weakest one. Everything else was higher. Qualcomm, AMD, Analog Devices, Micron, NVIDIA, all nice day there. So when you... No. So when you look at the semiconductors, you got at least a little attempt at a rally off of lows. AMD got an upgrade as well, and that was one of the reasons for the excitement. Retail stocks also got a little bit of a bump, but I don't know what you do with that. That's kind of a tough one there. And communication services, very extended. We put this trade on, this office trades one for me, actually one of my trades, right? Yeah, this is mine. And just an extended move in communication services because of Netflix, because of Disney, and at one point because of Twitter. And so that wasn't helpful there. But today, a nice little rally. Transport's moving higher as well, and the TLT, which is the bonds, trying, right? I don't know. It's trying to make a little bit of a low here. It's having a hard time doing it and not giving you the immediate reversal like the rest. But why? Why should it bounce significantly from here? That would mean rates would fall. Why should they fall? Is there any reason for that? Speaking of things like that, we talked in our Notes from Jazz email. It's an email that I do every weekend, send out to clients, and I like to go over the market, but I like to give you some things to think about, just different data points that maybe you're not familiar with. And one of the questions I asked in our Notes from Jazz, and I'll ask you guys as well, is what's the reason for the markets to really rally? I don't mean one day. This is fine. This is exciting. But I mean rally back to highs and give us a really, really strong year. What would be the reason? I have a lot of negative reasons. I've got the war, you've got inflation, you've got supply chain issues, you got interest rates, you got midterm elections, Fed rates, and we could just keep going. But there's no real good reason for the markets to rally. So what I wanted to do today is go, how will you know when there's a good reason for the market to rally? See, the Fed is sort of playing with fire here, if you think about it. They're talking about how they want to rapidly raise rates. And they're doing that intentionally. It's not like a conspiracy or anything. They're doing that because they're trying to talk down inflation. That's the fancy way of saying it. If they talk a lot about raising rates, then maybe everybody will say, maybe I won't buy, maybe I don't need financing, maybe I won't expand, and inflation will just start to work its way down. So that's the hopes, is that they could talk down inflation. Yes, maybe the stock market's a little weak, maybe the economy slows a little bit, but that means that they're able to not take as much action as they want. All that said, a Fed-induced recession right now is the biggest risk to the market and to the economy, by the way. If the Fed raises rates too fast and they put everything or bring everything to a grinding halt, that's a bit of a problem there. So what do you look for? The best outcome for the Fed at this moment is that they talk about rapidly raising rates, and the economy softens a little bit, inflation comes down, and then they can adjust and say, well, we were talking about raising rates more, but now we don't have to. That's what they really hope happens here. So what you look for in terms of finding a good positive thing or reason to invest lots of money into the stock market and into real estate and all this stuff you want to do, you're looking for a strong or consistent economy into rising rates. We already have rising rates. So if the economy remains kind of strong and just plugging along there, that'd be good. If inflation comes a little bit lower and we could fix the stinking supply chain issues there, that would mean the Fed would start talking more dovishly. That's a fancy way of saying they would start talking more calmly about raising rates. They wouldn't be so excited to raise rates. Now, that's what the market would want to see. Now, depending on how long that takes, it would also be good if Republicans won control of Congress, right? And whether you want them to or not, I don't care. But the stock market would like to see that as well, because it means very little will likely change in the next 2 years. So that's something to think about there in terms of what to look for. Any of that starts to show forward, or there's a little bit of a light cast on lower inflation, a little bit of a light cast on the Fed talking a little bit less about raising rates quickly. Okay, now you have a reason. It may not be great, it may not happen right away, but you have a good reason to say, okay, we all have something to look forward to. This may work. Now, as for supply chain, how do we know about that? That's not something that a lot of people focus on. I'll give you a way to take a look at it here. So you could track this actually using the Fed's numbers themselves. You want to see exactly what they're looking at here. You can look at the delivery times index. It is done by you could look it up, called Empire State Fed Delivery Times Index there. Still rising, right? Still very much at historical highs here. However, it's showing signs of weakening. And I'll change this guy here so you can see the index as a whole. I'm looking at just as far back as I can here. It's at the lowest levels that it's been in the last year. That's good. So delivery times are not as high as they were before. It's good news because those are for products that have already been ordered. A lot of people look at this and they say, well, delivery times, if delivery times are coming down, doesn't that mean that they just have less things to deliver and therefore they can deliver them faster? No, these are for products that have already been ordered as a way to take a look at it. The outlook for delivery times, by the way, is for another 5% drop. That's great news. That means we can put that part of the sort of wrench in our plan here with the market going higher, we could put that off to the side. It won't be an issue anymore. So just a fun little thing you can look at if you want to see like health of the economy, but also what the Fed may be looking at and how they may be making decisions. Ooh, I got a good one here for you. All right, so other than that, sector-wise, we kind of went through things. Healthcare was strong again, by the way. That little drop has started to kind of recover there. Our office trades, I hope I can pull it up. Office trades today. We did XOP. So I did a skewed strangle kind of a thing on that one there. Ratio strangle, you might call it. Cody put on Baker Hughes long, United Airlines short. I rolled out my Disney. We rolled out American Express. I closed the XLU position, which we had a short that was just over 50%, added to our GDX on the drop this morning, closed out our Dow. We were short on Dow Chemicals, closed that one out, and added the Qs by going long using options for doing that. And like I said, that's true. Yeah, the Qs were, in fact, the second best performer with the reversal here today. Pretty cool. If you want to join the office trades and you are a client, it is free. You don't have to pay for it. But if you want to, it is $13 a month. You can join us at jazzwealth.com/research. Coca-Cola was the only new high today. And even then, it finished well off of its highs. It's pretty extended here in the short term. But that was it. There was only one new high for the day. There were 49 new lows, and about half of them stayed down until about the end of the day. And then you started seeing more of them turn positive or very, very minor losses for the day. Salesforce.com is one of them, up about 2% on the day. It is very extended, is very oversold. Disney also extended and oversold. That finished up about 1.5% after making new lows here this morning. That's good because we have that as a office trades position, as well as looking to add more to that in our portfolios. You got Bank of New York Mellon. Actually, I'm just going to go over to financials. So if you're looking for extended stocks in a sector, financials will give you the most amount of stocks that are extended in each sector, right? So if you're going to do energy or healthcare or something, financials would give you the most number of stocks to choose from. Bank of New York Mellon is one of them, very extended in the short term. And you have U.S. Bank as another one. Actually, you have that one. You have State Street just comes to mind. I keep missing a chance to get into this one. I just forget about it till it's too late. And Truist was on mind as well. Did a little quick trade on this one in our office trades, and then it fell again. I don't know. We'll maybe come back to that. But financials, whether you're looking at the larger financials by using the XLF, or you want to use something a little more regional, the KRE are ETFs that you can use to kind of hone in on some of those areas. If we look at stocks in the news, we can do that today, can't we? All right. Twitter. So it appears Twitter is a done deal. $54.20 is what it comes out as. That's about just over $44 billion. And I believe that actually, I'm not sure if their earnings have come out yet. It's supposed to be today, I believe. I believe they were trying to get that done before earnings. I just read a quick blurb on it. And I don't know where we stand here. If the earnings have come out after hours, it is getting washed away in the, oh my gosh, Elon Musk owns Twitter now, and with a group of other people. After hours, it's still up a little bit. Yeah, so I don't know that earnings have come out there. Anyways, so that's where Twitter's at, back above the 200-day moving average, and pretty soon we won't be able to look at Twitter. It is going private, right? So essentially they are buying up all of the shares, and then it will go off the market and be a private company, just like your company or other people's companies that you know. I almost said United Airlines there. Under Armour. So Under Armour, Barron's had a lot of individual stock picks over the weekend that they were positive on. Under Armour is one of them. They said that they think, I just put this one down because they said, we think it can go up 50%. Barron's, not me. I didn't say that. They think that their new plan to improve the balance sheet and do all this great stuff is actually going to work. And so they were pretty positive. I don't know. It's nice to see some positivity out there. JP Morgan was a financial that was picked on this weekend by Barron's and many others. They pointed out that the current price of JP Morgan at the time would have been $126. This is well oversold and well due for a bounce. And lots of nice words like it looks attractive and it's undervalued and it's underpriced and all that stuff. So that's what you have there. Facebook, they were not so positive on. In fact, a lot of people were not very positive on Facebook. Lots of people commenting that it will take a while for them to essentially fix themselves with what they hope to do. And I don't know. It's been horribly weak. There's no reason for it to bounce. I'll give you that. Same with Netflix. There's really no reason for it to bounce some incredible amount. So that's where that one stands. And Otis Worldwide, you know them for their elevators, but they came out with earnings there. They had lowered guidance, but everything else looked really good going forward. They made 77 cents a share. That was better than expected, and that's where it stands there. But the best news, I know this is not stock market related news, but you have to see this because this is incredible. Scientists invent this device for splitting an Oreo perfectly every time. Like, look at that. You stick the Oreo in there, you put the contraption together, you drop it in the doohickey, you spin the wheel, put the handles on first, spin it, and then pop it out, and you have yourself a perfectly fractured Oreo. Now, sadly, I won't need to buy one of these because I have no issues perfectly separating an Oreo, whether it's double stuff or mega stuff or single. I have the delicate hands. I just know how it's done. So I thought that was cool, though. Somebody spent time on that. It was actually a college that put that together. I doubt it ever becomes something, but yeah, that's what we pay all that money for college, folks, right there. Real stuff. I mean, it looks cool. Anyways, I'll take your questions now if I can and see what I can help you with if I'm able to do that. Naturally, the VIX was quite lower today, too. I forgot to mention that. Tomorrow's earnings are Dr. Horton, 3M, Raytheon, Sherwin-Williams, UPS, Valero, AMD, got a bunch of them, Chipotle, Capital One, General Motors, Alphabet, Mondelez, speaking of Oreos, Microsoft, and Visa. Is big money reporting tomorrow. Yep. All right, let's see what we got here. Dr. Skills, when transfer accounts to you, do you lose positions? No. You can say, hey, I'm going to transfer an account, but please leave everything, or can you just go pick up my account and put it in there? We don't have to close stuff. Nobody has a monopoly on free speech. Oh, here we go. You imagine there's going to be a lot of tweets about what's happening here, so it's good for Twitter in terms of getting eyeballs on the app. How about that, huh? Yep. You're seeing a slowdown there in mortgages, refis, cash deals are bidding lower. Not here yet. Not quite here yet, but you can feel it. It's the same with cars and stuff. Why everybody just stop for a second. No need to go financing $100,000 cars. That may be too little for now. I don't know. But just stop. Let's all hang on to our money for a little bit, right? Yeah. Roku's earnings are on Thursday. Yes, they are. Yep. I don't see how they could get hosed again at this level. Oreos are grossly overrated. Get out. I like Oreos. I actually got now I don't like the mega stuff. I just bought them thinking, well, they must be bigger than double stuff. No, they're not good. It's like there's so much stuff in there that it's now gooey. It's not good. I would not buy those again. Yeah. Sorry if I missed any questions there. Why are bank stocks getting crushed? Wouldn't rising rates be a good thing for them? Yeah, that's a good point. Yeah, I brought that up before. Where shouldn't it be a good thing? Shouldn't these pullbacks be buyable for them? Are they falling because people don't believe rates are going to stay high like this? I don't know where you think they're going, but it makes sense to me that pullbacks in banks would be buyable. That doesn't mean that because rates are going higher, banks need to rally. It will take some time for them to start loaning money out at that wider spread, but to me, it should mean they're buyable. No, I could be horribly wrong, but that's just an elementary view of it. Yeah. As an earnings miss already priced in for Meta, I don't know. I haven't looked into them and what they're looking to report as much there. It's not one that I get excited to look at myself. Yeah. Matthew's sticking by his name there. All right, so what's your cookie then? Come on, give me the cookie. What's the one that's good? If you had to pick a cookie, I got to hear it. I'm gonna be waiting. I'm gonna be looking. If you got something good, I will bow down to a better cookie. My account long term is down. All right. So you got a little loss there because of PayPal, Bob, and SoFi. Yeah. Well, unfortunately you have a handful of stocks that were beaten down and more relatively weak than the market and continue to be. I don't foresee you changing your mind now and just running away from those positions. So that's a tough one for me to say. I don't have any thoughts on that. I would just say, man, that's a bad string of positions to have. Kirk ate so many Oreos as a kid, it made him sick, and I'll never eat them again. I did the same with watermelon. I don't know why, but I tried to eat a whole watermelon, and now I just can't stand that fruit. I can't tell you the last time that was the last time I've had a watermelon. I've never grabbed one. Yeah, AMD will be a wild one. You're right. That is probably true. You were looking for short positions to add to office trades. How about KMB 150, 145? So we can look at it. I wouldn't be able to say. Oh, you like it? Because it's extended there. All right, you bring it up, man. Bring it back up. Let's do something with that one. Because you're right. You are right. AMD 85 puts. You want to do that one too? Kirk says chocolate peanut butter cookies. Okay, if it's the Nestle ones in the yellow package, the break and bakes, I'm with you. Lucas says Nutter Butter. Get out. Come on. No. Nutter Butter. I mean, I know he's on YouTube. He's supposed to make everybody happy and not take a side or whatever, but Nutter Butters, man, they're good. They don't beat Oreos. Okay. And Matthew doesn't even eat cookies. You can't vote then. I don't like it. Candy bars and Little Debbie's. Oh, man. So disheartening. So disheartening. All right. Mint Milanos. Who are you guys? I just don't even know anymore. Like, to me, the chunky chocolate, Nestle Break and Bakes, top of the line right there. I mean, I could pick those out of a 4-cookie lineup all day long. But let's all be friends, right? Office trades, OD, AMD. I don't know what that means. So we do have AMD. Yes, you're right. Do you cover before earnings tomorrow? No. I mean, unless it just for some reason opens up a whole lot of money and we're able to take a profit beforehand. But I don't think that happens. No. Yep. There's Harry with the daily Tesla quote of the day. Cheap. Yeah. Oh my God. Now, you guys are just egging me on. You're trying to get me to... We're going to break this guy. Tell him Oreos suck. That's what you do. All right. Well, hey, you guys enjoy your cookies, whatever these weirdo cookies you want to eat. You have a good time with that. I'm going to wrap it up, get out of here. We'll be back tomorrow. We'll do this all over again. And, of course, the market's going to be doing it all over again. It will be an exciting week for sure with all the earnings coming out. And then May 4th, right around the corner, we got the Fed meeting, potentially the half-point rate hike. So don't go anywhere and, see you tomorrow right back here.